Hi there and welcome to another edition of Who Moved the Market. As usual, I'm your host Surabhi Upadhyay and with me on the show is Reema Tendulkar. Guess what? You'll be seeing far more of Reema in the coming few days than you have in the last 2-3 weeks or so. And that is because the earnings season is upon us. Welcome to the show, Reema.
Welcome and
get comfortable. You're going to be here for a while.
Well, this week we've got Infy, HCL, Wipro, and next week we've got, sorry, what did I say? TCS
HCL Tech.
TCS HCL Wipro this week.
Yeah.
Next week we've got Infosys. And wait, let me tell you the mid-cap names. LTI Mindtree, L&T Technology, Persistent, Coforge, Zensar, Emphasis. And there is a list.
It's a long list.
There's a longer list.
Yeah. But, the interesting facet is that I don't remember the last time we were entering an earnings season, a quarter, with everybody having pretty much written off IT. Anyone you ask on the street, analysts, market experts, and they say, oh no, IT earnings will be in it. It's a washout quarter. Yeah. Isn't that so? That's the large consensus with which everyone's going. I want to ask you why. Why is the bearishness so pronounced this time?
Well, you hit it on the nail. Everyone has written off Q1. It's expected to be a muted quarter. And this follows Q4, which was much lower than what the street was anticipating. The reason is the uncertain macro. Banks are in a mood to conserve cash. They don't want to spend on their digital products, on their digital transformation, even though it's a necessary thing. But they're saying, let's push it forward by a few months, few quarters. Let's see. So discretionary spend is being put on hold. In some cases, projects are getting cancelled. So this happened in Q4. We saw it in February and March, and it spilled over. And the management commentary. So a lot of investor conferences took place in the month of June. And the overwhelming majority of the managements of technology companies have said, well, the demand environment has not changed, which means it's as bad as what we had in Q4. No improvement, but it's not materially deteriorated, which is why, it's going to be a weak quarter, just like Q4 was.
But what's also interesting is that while the macros and the overall expectations are running so low, the same is not true for stocks, because IT stocks have actually participated, a little less than, of course, the Nifty or let's say, defense and some of the other sectors like auto, which have run up. But Reema, we're also entering the season with IT stocks having had a rally from the April lows. The Nifty IT index is down about, I think, just 0.5%. If you're looking at it for the last 1 month, the Nifty is up 1.5%. So it's not like we're entering with stark underperformance, which is why I get worried that in case there are some, unexpected skeletons in the closet, or if the commentary is even more negative, then I don't know if then stocks, at least at a stock level, would be ripe for maybe some more selling.
I think so. So Kotak says that we find the resilience in IT stocks surprising, because IT stocks have rallied anywhere between 10 to 20% for the large caps. Ex of Infosys. Infosys is still under pressure, but names like HCL Tech Mahindra, these stocks have rallied. Mid-cap IT, names like, I can't remember, but broadly mid-cap IT like Birlasoft, for instance, has seen about a 35% rally from the April lows. So in a nutshell, IT stocks from the April lows to today have seen a pickup. Right? So that's a bit concerning. And secondly, the reason for the improvement is that investors have said Q1 is going to be weak, Q2 is going to be weak, but H2, that's Q3, Q4, things will start picking up. So consensus expectations for the large cap, mid cap IT companies are baking in a recovery in Q2. The bears are saying, well, that recovery is not going to take place.
Yeah, this is going to last a while.
This is going to last a while. And therefore, the bears are bringing down the EPS estimates, the revenue growth forecast. Right? So which is why there have actually been some downgrades in IT over the last few days. Jefferies is negative, Morgan is negative, JP Morgan is like a bear now. They're a huge bear for a while now, but you've got the others like Morgan and Jefferies joining in.
Okay, so you need to watch this very, very carefully. Be at the edge of your seats as the season takes off. And let's get down to the nuts and bolts now. The companies that are reporting on Wednesday would be TCS and HCL Tech. Let's start with TCS, the giant, Reema. So, what absolutely flat growth in Q1?
Flat growth in Q1. So 0.2% constant currency term is a CNBC-TV18 poll. In dollar terms, it's a growth of 0.5%. And remember, this is June quarter. It's typically a very strong quarter. If you map the June performance, for the last so many years, you will see a 3%, 4% kind of growth, right? But this time, no growth. Margins will come under pressure because it's a wage hike impact.
Okay.
So top line, no growth, maybe a marginal 0.2% growth. Margins down 110 basis points due to wage hikes. And this, by the way, at least for TCS, is going to be the weakest June quarter in more than a decade, ex of the COVID year.
Wow. Okay, that's quite a headline as well. You know, with TCS, a couple of interesting things. One is I remember they had a deal cancellation in the quarter. It was a large deal, though I think they had done about 70-80% of the life of the deal, but nonetheless, there was a cancellation. And more importantly, there's a new man who's taking charge at a very, very interesting time of flux. So what would you be watching out for, and what are you looking forward to asking when you'll meet the management?
Well, K. Krithivasan is the new CEO and MD. He took charge officially on 1st of June, but he's a TCS veteran, having been there for more than 4 decades now. It's just that we've never interacted with him. Yeah. We've interacted with the CFO, we've interacted with the HR head, COO, NGS, NG Subramaniam, but we've never spoken with K. Krithivasan. Yeah. So for all of us, it's going to be a first time, and for him as well on that dais.
And imagine he has to answer all of the difficult questions in the first meet itself. Why is the demand low? Are clients cancelling? All kinds of not very nice questions.
And the toughest question is that for a company whose revenue size is $28 billion, you're asking him, why did your revenue miss by $5 million, right? And he's like, guys, look at the big picture. Our top line is $28 billion. Who cares about $5 million here and there? It's like, asking why did you lose 5 paise? Right?
Absolutely, but I think,
So basically, we're going to be, asking K. Krithivasan and how he's planning to navigate this uncertain environment. Secondly, on deal wins. Deal wins have been pretty good. We've had a slew of order wins this time. There has been a Nest, Phoenix Group, M&S. So even though there was a cancellation from Transamerica, TCS has won some good deals, which should bode well for growth in the subsequent quarters.
Okay, well, let's see what K. Krithivasan says, and I think managements across the board will have a tough job at hand, because they have to convince the market that they will tide over this, and this is not a medium-term problem or a long-term structural problem with some of the perma bulls like JPM thinks that this is a structural issue. This is not just about 1 or 2 quarters. But anyway, that's a conversation for later. So that covers TCS. Let's also come to HCL Tech. So what would the numbers perhaps look like here?
Well, dollar revenue growth of 0.9%, constant currency growth of 0.5%. Okay. But there is this buzz in the street that HCL is going to report weak numbers this time, which is why in the last 4 days, HCL Tech share price has fallen by 6.5%. Right? It's even as some of the other IT companies are trying to put up a fight today, HCL Tech is still struggling. 6.5% gone on HCL Tech in a span of few days. Margins for HCL Tech will be on the flatter side, 17.9%. There is no wage hike, but what happens is when there is no top line growth, when your revenues are weak, the costs remain the same, and therefore you end up.
There'll be a margin impact anyway.
There is a bit of a margin impact, and the bottom line, according because there is some margin hit of 30 basis points that we're anticipating at 4.4%.
Okay, so that's on the basic numbers. Any other factors that we should keep in mind for HCL
guidance?
Tech?
HCL Tech gives you a guidance, right? Along with Infi, these are the 2 IT companies in the large cap space which gives you an annual guidance. Top line growth guidance is 6 to 8%. Just to refresh your memories.
That's in constant currency. 6 to 8%.
Constant currency. 6 to 8%, and EBIT margins of 18 to 19%. It's likely to be held on, right? It's only 3 months since you gave the last guidance, so companies don't usually change it in the first quarter. They wait to see the first half of the year, because you don't want to constantly, keep changing your guidance. 6 to 8% growth likely to hold. Margins at 18 to 19%. Watch for commentary around ER&D, because discretionary spending is being put on hold. So is that going to hurt them?
ER&D for our viewers?
Yes, engineering, research and development.
There you go. Okay.
And they have an aspiration to improve their margins to 19 to 20%. It used to be their guidance earlier, but last year they brought it down. So do they get back to it? How are deal wins, the macros? I think this time it's going to be all about assessing from the managements the corporate behavior. Is there a change in the corporate behavior? More than the numbers, I think the street wants to know that are the clients more confident that they can start spending?
Well, if an EY report is anything to go by, which I read a couple of days back, EY polled a whole host of CFOs around the world, and according to that survey, I think if I remember the numbers correctly, about a little over 70% said we want to hold back on IT spending. It can wait. So
it's a tussle between the CFO who wants to conserve all the cash and the CIO saying that, guys, we need to spend
on IT,
on digital transformation. But it's just about assessing the corporate behavior this time, judging the macros to understand whether a recovery, a pickup in growth will take place in the second half of the year and next year.
Well, whatever happens, it promises to be a very interesting couple of days. So keep it with us. Of course, you will keep getting the earnings coverage live on CNBC-TV18, the channel, and whenever there's an interesting move in stocks, you know where to find us. Who Moved the Market? We come to you every day at 2 o'clock on YouTube and on Twitter, and we promise to pull in Reema once again once these numbers are out, and we'll make some sense of what is happening. Thank you so much for joining in. See you again tomorrow.